complex pullback is when price action starts doing a pullback that creates internal structure, typically always beginning in the opposing direction of the primary structure on the same time frame. So if you think about how a market moves, when a market is moving aggressively with a lot of momentum, it won't create complex pullbacks, right? Because it'll just keep moving up like this, potentially going parabolic. However, sometimes when the market may be losing some momentum, maybe needs to reaccumulate, there's many different reasons, it might perform a complex pullback that looks something like this. Now, what is a complex pullback telling you? Well, it could be telling you that the market may take a little bit longer before the next continuation occurs. So if you see in the context of this drawing right here, we've got the primary structure, we've got internal structure creating a complex pullback. This is internal structure because here's the last higher high, here's the last higher low, and price is contained within those two swing points and is creating new structure. Hence, it's internal structure. And in this instance, we can see here, we've got a channel. So there's potentially liquidity pools being created on the top here by way of sell stops. Okay, sellers who are shorting the market creates liquidity up here that may fuel the next expansion. It may not. But basically what a complex pullback is telling you is that the market typically just needs a little bit more time before its next expansion, or it could be developing into a range or a consolidation. The complex pullback may lead to something like this. Oops. Okay, where it sweeps to the range, then it comes back, potentially comes back, maybe it comes back again, starts ranging, right? So it could tell you that the market's about to start ranging and it may need to consolidate for a while before it determines the next direction. And the trend just may be weakening. These are all the considerations you make. Now, we never really know what the market is doing or where it's going to go next, but we need to read the signs. We need to read the signatures that the market gives us, these little clues, and we need to be able to interpret that information. So when you start seeing this complex pullback, we need to start thinking about the different concepts that we've discussed already, such as SFPs. Does the complex pullback lead to an SFP on the primary low? Okay, we get that nice SFP candle down here. We get that SFP candle into the primary low. We can see we've got some nice liquidity that's been untapped here, these stops that haven't been run, and that could be a good trigger for us to go, cool, we're trading with the trend. We've got the SFP on the primary structure low. Now let's trade that into expansion, or let's at least range trade that back to the top of the range high. Okay, we need to look at all these things once a complex pullback starts occurring, because at the very least, the trend may be weakening or it may take longer before we get the next expansion. So we need to come back to looking at interaction at the high and the low. The moment you see these complex pullbacks, you've got to start thinking, all right, is this potentially turning into a range and do we need to range trade it? Or is that range potentially going to break down and reverse? Or is it a reaccumulation range that's going to expand further to the upside? So that's where all of your other analysis comes into play, so that you can determine, is this just a trade for you for one side of the range to the other, or should you be positioning into this retracement, this complex pullback developing into a range to position for further upside? So just to summarize on that, price is trending aggressively, then starts putting in a complex pullback. that's when you should start thinking, okay, something different is happening with the trend here. It's not just going to zoom straight up, or maybe it can, but at least warrant some warning. And that's where we got to look at those interactions back at the extremes, back at the highs, and monitor price behavior.